Hi, I'm Warwick, and I'm the host of the Kiwi Advisor Network podcast. Today, we've got a great episode. It's a little bit longer than what we normally do, but there's just so much good stuff in there. I had a conversation with Craig Pope, and he's been in the industry a long time, and he's done something a lot of advisors haven't done, which is build up a business and then sell it. So he talks about that journey, as well as starting out from scratch at the age of 51. So it's a really... I think there's so much value for everybody in here. It is, like I said, like a little bit longer, but definitely worth persevering. There's also some really good tips in there for how to market yourself. You know, he's gone through marketing his business in the early stages to using only the stuff that he found really valuable later on in his journey when he started from scratch again. He also jumps into parts about hiring staff, how to remunerate them, you know, the whole salary plus commission model and what's worked for him. There's even some parts in there about outsourcing some of your support staff to do personal errands, such as buying your wife gifts. So it was really fun. I had a great conversation with him and really enjoyed it. I think you will too. You can check this out on YouTube, which is, if you're engaging with it now, you might also want to know that you can also view this and listen to it through Spotify as well as Apple Podcasts. Remember, this counts towards your CPD hours, which I think is a really easy way to tick off some of those points. And also, I always ask, but if you do know somebody that would benefit or get value from this, please share it on. It really helps here because we get the view counts up, means we can invest more time and energy and money into it. So sit back, relax, enjoy the podcast. Sounds like my dog, who I thought would be fun to put her up on the hot seat next to me for this introduction, wants to get down. So we'll jump straight into it. Craig,
hi.
Thank you so much for joining us today, coming all the way up from Wellington to have a chat. I think a good place always to start is just to tell us about how you got into the industry and what your kind of journey's been up until this point.
Yeah, well, it's been a bit of a ride, interesting journey, and I've gone full circle on a couple of things. But I guess I started out in the industry back in 2005. I bought an approved mortgage broker's franchise. And the interesting thing was at the time I didn't come from a banking background like a lot of brokers do.
What were you doing?
I worked as a business development manager for a vehicle leasing company, so just leasing cars to big corporates and government. And I had a rental property or two at the time, and I just I wanted to earn more. I think I was in my late 20s or something, probably early 30s, and just felt I could do better, and had used a mortgage broker and was reasonably good with numbers and new property and being a mortgage broker to increase my income was a good fit. And the approved mortgage brokers franchise back then there was quite a few franchises out in the market. It was a bit more viable for a lot of them, and that sort of, I guess, I didn't know a lot about the industry, so buying into a franchise gave me a little bit of comfort.
Speed run rather than kind of jumping right into the deep end.
Totally. But actually, I will caveat, I did, when I left school in the late 80s, I did work for the treasury of a bank. I don't class it as banking because it was just a totally different world. I mean, by the time I was, 18 or 19, I was responsible for hundreds of millions of dollars of payments going out from National Australia Bank. It was National Australia Bank when they were in New Zealand. So that was a bit of it was a real interesting right into the depths of corporate life from a very
18,
young
19.
age. Yeah,
Wow.
it was, and just I didn't sort of appreciate the responsibility I had, because if you stuffed up, a $50 million payment, at night, if you miss one, and occasionally you did, you were roasted the next day. But
it's not. I mean, I think about my responsibilities when I was in the workforce at that age.
It was because I joined as an office junior when I was like 16, and just after 6 months went into the foreign exchange settlements and spent some time in the dealing room. While it wasn't really my sort of bag, and I do remember the when BNZ was bought by National Australia Bank. I still remember the SWIFT payment coming coming through, and we're all just in awe of it around the office because I think it was like nearly $1 billion, or I should have made a copy of it actually, but that was the, the money that was coming through the Swift machine, and it was like, oh yeah, there's the money from National Australia Bank to buy BNZ, and some things sort of stick in your mind, and yeah,
$1 billion transaction does stick in your
yeah,
mind.
pretty sure it was $1 billion. There was a lot of zeros on the end of it, and I was thinking, oh wow, that's a big one coming through. So
it does almost. It just seems like monopoly money when you get to that figure.
Yeah.
If you're 18, 19,
and
really getting exposed to it.
Absolutely. And even when I was an office junior, I was taking checks for 50, 20, $100 million across the road to the bank in Queen Street. And, I'm just cruising around thinking I'm pretty big because I got all this money that I'm carrying around as a check. And, so I did that. That was for 4 years. I didn't really class it as banking because it was a different world. And then after that, I just sort of squandered life for a few years. And and so in 2005, I got into the mortgage broking business and did pretty well. I did make one error at the time, and that was buying a database of clients that the NZF Finance owned, Approved Mortgage Brokers, and they sold me this database of clients, a trail book, and they'd bought it off somebody else and then handed it on to me. And I remember sitting looking at it thinking, I was doing well, do I need to buy this? And I ummed and ahed, and I remember them saying it's a good deal. And so that was my first lesson was, if your gut feeling didn't quite fit with buying it, because the trail just dropped off straight away pretty quickly.
Right.
And I didn't have time to manage it because I was doing lots of new business, and so that was a bit of a learning of caution around buying books.
Listen to your gut. I think a lot of advisors are trying to buy books at the moment. Just, I think with the regulatory landscape, a lot of people are expected to be leaving the industry. I'm not sure if it's actually the case, but
yeah. Well, obviously I'll touch on that in a second, but I mean, like anything, you buy low and sell high. And I think I wasn't smart enough because as soon as I bought it off the franchisor, they were still clipping the ticket of the income, and it was like, oh, geez, I didn't really think about that. Paid a fortune for it, and then they were still taking a clip of the income afterwards. Yeah. So that was my first lesson. And then come 2008, and it was interesting because at the conference yesterday, we talked a lot about the GFC and how it's similar to what's happening now. And, I got spooked actually because the things were going great. And then all of a sudden volumes tipped over pretty quickly. Credit crunch. Banks were treating mortgage brokers not so flash back in those days. Like some of the banks were cutting trail, and so cut a long story short, I sold what little book I had, and ironically, that's when I went into real banking and worked for a major bank for 2 years in their business banking, and pretty much hated every minute of it, to be honest. Literally, from the first week, it was just like, oh crap, what have I done? But we had I had a really young child at the time, so my wife wasn't working. I thought, geez, and I didn't want to do insurance. We talked about that yesterday about, shall I call it pivoting? People pivoting and doing, it's always been talked about. Do you do insurances, and now do you do KiwiSaver? And I just didn't want to do insurance back then. So 2008, got spooked, got out. Went and worked for this bank, hated every minute of it, because you went from clients just, loving you to bits to banking clients who just didn't hold back if they thought, oh, I don't want to fill in a statement of position, I don't want to do this, I don't do that, and, it was a real eye-opener. So I kept in contact with a guy called John Killick, who still part of the industry with... And just kept in touch with him, and I just kept in touch with the industry, and literally for 2 years plotted my way back to getting back into the mortgage broking industry, and just thinking I'll do things smarter and have my own brand, and because that was the thing when you're a franchise, I used to spend quite a bit of money on advertising, but it would benefit the other franchisees in Wellington who might not have spent as much.
True. Okay.
But it's again you learn, and then basically in 2010, ironically, we had our second child along, so wifey wasn't really working at all, and so it was a big risk just to chuck in the job and get started again. But luckily, the War Office backed me, and but she did say, well, you're not chopping and changing again. This is it. So 2010 set up under my own name, and that was the other thing I was going to touch on, because one thing. And ironically, I did change it a few years later, was do you set up using your own name, or do you set up, using a generic
like an
brand?
agnostic brand name?
Yeah, and look, I grappled with that constantly, but in the end, I suppose, when you're selling your business, you're selling the trail. So the brand, it's highly likely somebody who buys your book won't give a monkeys about your brand. I mean, unless you're a Squirrel or a Mike Pero, whoever, who's the brand is, right up there. If you're pondering personal name versus a generic name, I don't think it's, at the end of the day, when you come to sell, it's really your book that somebody's going to be mainly interested in. That's what I learned. But the hard thing is, if you're looking at getting contractors, they tend to want to be part of a brand rather than the personal name. That's my opinion. Obviously, there is some exceptions to that, but that's
I found that too, because if, say it's Chris Pope Mortgages or something like that, people will call up and they want to speak to Craig Pope. Yeah,
totally. It's so that's I went backward and forward for ages. But anyway, it was Craig Pope, and then we rebranded to Pope and Co. Maybe 2017 or something like that, 2018, as the team was growing, and I had a couple of contractors and staff. So I guess between 2010 and 2020, just hammered it, long hours, building up a really good trail book and really well-known business in Kapiti. But we covered all of Wellington, and that, obviously, in that transitional period, over that period of time, I think a lot of people in the industry would see it too. You got less and less time to be in your car going out and seeing people. It became more, online, or come in and see me in the office, because your time is just, so precious. Especially these days, you just, back in the day, somebody's got a pulse, they say, can you come and see me? Yep, I'm in my car, I'm there. You come out with some, rough written application form, some bank statements, some pay slips, a copy of ID, and then you're writing up a diary note, and then you're chucking it through your fax, and a couple of days later you got an approval. So you had time to go out and see people and be that mobile advisor. These days, if you are driving to see people, then I don't know how people get the time to do that, especially if you're in Auckland, you'd be stuck in traffic.
Oh, goodness, yeah.
But,
we try and do that mainly, like we do go out and see people from time to time, but generally most of the time it's online. And you do notice if you have a couple of meetings out, I think last week went for a couple and just the entire day's gone and your phone's blowing up the whole time. You're still getting emails through. And I just felt I almost haven't recovered from it.
I know, it's funny.
Still playing catch up.
Yeah, but for quite a few years I haven't physically gone to see something, apart from one or two when maybe, we might have had a coffee somewhere or somewhere. But yeah, it's interesting how the industry's changed. And I just hammered it for those 10 years. We did, as I was getting bigger, I did, grapple personal name versus generic name, and then I went for the generic name, the Pope and Co. Kind of, half and half really. And then, around 2020, I had 6 staff, and I guess I was a little bit, a little bit worn out. And, like a lot of brokers out there, I mean, we work long hours. You're always switched on. And usually because we love the industry, I think most brokers, it's such a good industry to be in, and you do have good flexibility. So I'd worked my ass off for 10 hard years, built it up, significant trail book, 6 staff, and I guess I was just a little bit tired, and, staff issues, I think a lot of people out there that have got the staff will concur with the challenges you have. And I guess I'm a little bit cynical that, we do live in a bit of a fickle industry, and that banks do really have a good, they're our friends, but they're also our enemies in a way, in terms of, we're competing with them, and they pull the strings on how we're paid. So I guess as I got bigger, I thought, when's a good time to cash up and get the money out for my business, and reevaluate things.
Was this around 2020?
Yeah, so literally I sold just basically as we're all going into lockdown. That's when I did my sale and purchase agreement and sold it. But I'd been in discussions with a couple of parties, and one for about 6 months, and I still was umming and ahhing over it. And I guess that would be one tip I'd give for people who are pondering selling, is that start thinking, succession planning's, we hear it all the time, but it's start, I guess, making connections with potential buyers of your business.
How do you make those connections? Do people reach out to you? Or
or you talk to people like you. Yeah, you just drop it out there with, I think, we were with the G at the time, and I think I just floated it out there that I might have been keen to talk, and obviously some advisor companies out there are proactive in seeking books. So you look at, because my plan was sell it, get as much as I could, and then contract back to that buyer for 2 or 3 years, and then look at setting up again, which is basically what I did in a nutshell. That was the plan, because I'm 51 now, and I was obviously 48 or whatever, so still thinking I've got a lot of years left in me. But as you get bigger, the buyers for your business have got that sort of money, become less. So I thought, I'll cash up now, take the foot off the accelerator, contract back to that company for 2 or 3 years. Obviously there's restraint of trade, and then build it up again from scratch. And in the 2 or 3 years that I was, 2.5 years, I was contracting back to the company that bought my business. They kept 2 of my support staff. So, pretty much, they did a lot of the loan writing basically. So I was able to work 30 hours a week, still earn a good income, and play a bit of golf and just have a bit more of a work-life balance.
You had a bit of time to maybe reflect on what things worked, what things didn't when you had swapped roles. A lot of advisors don't have that time to do it. Do you still find yourself kind of taking a step back with your current business, or is it all just go the whole time?
Yeah, well, at the moment it's really interesting because I'm a one-man band again, really. So it is go. It's I guess when I left the previous company, at end of October last year, I was pretty much shitting myself, going back out on my own again, and not having anyone to pass on. I'm literally starting from scratch, but it's and it's at a time when there's the volumes are way down, but it's now that I've got all my nuts and bolts and website, and I'm using the CRM and using technology a little bit more in those processes, it is and inquiries picked up significantly in the last couple of weeks, and it is really
nice.
Yeah. I guess it was good being quietish over December, January, so that I could get all my nuts and bolts set up. And now that sort of contacts that I've had for years and years see that I have set up again, and getting my old sort of advertising and cunning marketing plan set up again. It's time management now is really, really key now that I'm sort of back to just being myself with all the hats on, having no one to delegate it to. But that'll, I'll just, the interesting challenge I've got is I've braced technology, and obviously your CRM's great for that, is because my processes are a little bit different, how I incorporate a support person into that new process. So that's a challenge I've got, that I will need somebody likely this year, is how, with the process being a bit different, how do I make them fit? Before it was pretty easy, I'd interview the client, get the info in, pretty much will write up a diary note or whatever and just give it to my staff to put it in the CRM and check the bank statements. But now I'm doing all of that, so it's getting a support person to fit in with my new processes will be an interesting challenge.
Sometimes I'll show people the software and it's a little bit different, but I think, if you can put them in touch with maybe some other advisors who use it and use it really well, and just sometimes just taking a bit of a step outside what your older way of doing it has been, you're like, okay, there's actually some efficiencies I can build in here by getting the client to do the fact find themselves.
Totally.
And a lot of the time, clients are actually keen to do it, especially, younger generation, but people are used to filling out online forms now.
Yeah, you did right, eh? It's and that's one thing I've embraced. I used to love the old form where I'd email it out to the client, they'd print it out and they'd write it down and but now, pretty much everybody does the online form, which is great because it uploads. Getting them to do the online bank statement link, they're using the Alien, and I pretty much will make people do that because it just makes the job easier. I've been using a PDF application more, and so if people can't print out, the forms to sign, I can send them, the document to sign online. That was something that I in the past didn't really get my head around. So I still like paper on my desk because I like doing physical calculation. If somebody does the fact find, I'll print it out and then I'll visualize it and I'll be writing notes. I'll be checking their expenses, and it's, I like to make notes and plus one thing I haven't yet embraced is the pipeline on the CRM. I like my files on my desk thinking, right, okay, just looking at that, and I'm still a little bit old school.
I'm going to bloody chain you to the desk after this and I'll make you get used to it.
I know. Maybe that'll be my job for, a new support person to check that pipeline a bit more. Then maybe that's something I can delegate. But it's been good. It's like I say, I crapped myself for the first month or so because, truckload more money going out, and I had to lease an office, and and obviously being in our industry is a lot more expensive now than what it ever has been. So you've got all this money going out and
PI and compliance costs.
It's just astronomical. But it's just the way it is, and I think that's where you've got to really, you can't save the world with clients. You can't help everybody. You can give them a plan to, say, right, well, you can't do anything now, but here's what you need to do to get there. But you've just got to value your time, that you just can't help everyone, and it's okay to say no to people. I think you've got to really, as you get busier, obviously when you're starting out, you're chasing anything with a pulse. Not that I need to do that because I've got good contacts and what have you. But if you are starting out as an advisor, you just start thinking that, we talked about yesterday at that conference, who is your target market, and that's how you tailor your advertising to them. So now I might not be so, my target market's probably more the sort of mid-aged people where they might be trading up or trading down or looking at an investment property. That's the sweet spot for me.
You always find you connect with people that are in a similar life stage to you as well. So if you've gone through that process,
totally,
like younger advisors, they connect really well with first home buyers because they're going through that journey.
Absolutely, and I think that the other thing too is that I've got a bit older and wiser, definitely older, and I'm not afraid to tell people they shouldn't be borrowing what they're trying to borrow. Whilst it's it's a bit contradictory. We're there to help people borrow money, but I look at some people and say, well, I could get you that money, but it's a dumb idea. It's
not a good outcome.
Why are you doing that? It's because you haven't thought about this, and this. So I guess I'm a little bit more holistic with that, and that's where those people that already own a home and they're looking to, go to that next stage or, buy a business or do whatever, I can give them a little bit more of life experience view on it. So I'm not afraid to say to people, look, yep, we could get you the money, but I don't think it's a good idea because of this, that, and the other. Have a think about it, and and just be sure that it is what you want to do or should be doing.
That's kind of what the legislation wants,
Oh yeah, and look, and part of it is like I don't want to, I guess. Again, I'm not just going to chase loans just for the revenue. If I'm not going to bust my gut trying to get and flogging a dead horse or trying to get somebody a loan if I don't believe in that's the best thing for them to be doing. And I think that's where I really try and pre-qualify people with a phone conversation first. If people's, I do like people to come and see me at the office, but at the same time, I don't. It's not just show up and we'll start from scratch. We need to have a chat on the phone first so I can really get a feel for what it is you're trying to do.
What are some good questions to ask clients to get to the nitty gritty so you're not having a 60-minute conversation before you find out there's no deal?
I know, and it's funny, I try to, you touch on a good thing because some people just want to, obviously unload a whole lot of stuff and it's just like, no, I've got set questions. So for starters, I do say, look, I've got some quick fire questions. So just give me quick answers so that sort of narrows it down. Because sometimes you do get a bit of a life story of some of it. And I am interested to hear that because, but it's really the quick nitty gritty I want to hear first. And it's just preparing them that I just want some quick answers. And it's just getting to know, it, and things like, is there trust involved? Have you spoken to anyone else? Is there, if it's first-time buyers, can family help? It's just the usual routine questions, and I guess that's second nature to a lot of us. And sometimes it's sort of asking why are you looking to do what you're doing? That's something, and sometimes you don't, or asking, well, how old are you, as well? It's a tricky question to ask, but it's such a relevant one.
What year are you born in?
Yeah, it's you especially I don't know if this is on PC, but sometimes women on the phone, I'm a little bit nervous about asking that question. Asking
how much do you weigh? No,
that'll be in the triple
insurance advisor
CFA.
could do that.
Yeah, it'll be in the triple CFA somewhere. Weights, but you're just a bit. It's just like I just sort of get some rapport on the phone first, and it's like And I just sort of delicately say, age is an issue. Sometimes you can get an idea of their age on the phone. You can see where it's going because they say, oh, I've got kids, but they've left home. Well, straight away I think, okay, well, this could be an older person, or they're buying out their ex. And then if once I've built a little bit of rapport on the phone, it'll be, do you mind if I ask how old you are? Okay, so you're 55, right? So, the banks are going to bring the goalposts in. Doesn't mean to say you can't borrow money, but there's a good chance that, you might not be able to borrow as much than if you were 30. So, and they get it, but it's just that little probing journey and
context as well.
Yeah.
It's important.
Yeah, totally. And again, it's it's just trying to drill into and just saying to the client, I'm going to ask you the questions that are key for getting the info that I can then tell you if I can help you or not, because I might not be the right person for you, or I can help you, but because the banks, the amount of money I'm going to get from the bank on this won't pay me for the hours, so I might have to charge you a fee for that. And then I won't necessarily say what that fee is. I'll just say, look, there'll be a fee, but I need to think about what it might be, and I'll email it to you, and then you can have a think of, or if I do know off the cuff, then I'll say something and
give them a rough idea.
Yeah, and generally I don't, and this could be something for some of the more newer advisors out there. I don't remember we have got intellectual property up here, because if I'm talking to somebody about a deal, I'm not. I'm straight away I'm thinking, okay, this could be this bank or that bank or this non-bank or that non-bank, but I'm not giving those names to the punter, because if you dump all that on them, they'll think, oh, I'll just go to BNZ by myself, or I'll do. So you've got to keep some of your cards to yourself so that you get that agreement that you're going to do business, and then you send them the forms and maybe arrange a meeting or whatever. But I don't tell them the solution straight off. I might say, look, there is a solution, but I've got to get this, and this, and that. And this is how long it's going to take. But I might have more thoughts once I get all your information in, because I don't know, 8 times out of 10, 7 times out of 10, you get all the info in and it's like, oh, you didn't tell me about that, or you didn't tell me about this, or actually I've seen that, so I think we might actually do this as a different way.
Okay.
So it's about getting info, but being not necessarily giving the solutions to the client on the phone. You can still say, right, I think I've got a plan. I've got a plan for you, but we need to do this, this, and this. Then that way you're not giving all your IP up front.
Giving all the value up front.
Yeah, you want to keep them working and just, and you know, in terms of disclosures, I say, well, you've got to use me exclusively. Otherwise, if you're going to be talking to me and then going to Johnny Broker down the road and then going to this bank yourself, then a fee might apply if I don't arrange the loan, because, you know, I've got to spend time working on this for you. So, you know, we do need to, you need to trust me, and we work exclusively. And you get that sort of get that agreement of them. It's part of that, I guess, that disclosure.
It's like you said, you don't want to be feeding a fed horse. You know, if you can at least get that done up front.
Yeah.
It just helps just filter out a few of those. We not that we have to do much of it, but
yeah,
I mean, if we're bringing on new advisors, a few questions that we need to know about. So things like credit, criminal history, and not that it's like necessarily got in the way of things in the past, or maybe it has, like I'm not dealing with it, but just asking up front, it just, it saves so much time.
And that's the thing too, when you know, I guess I think one thing that's really interesting that I've seen is all these young go-getters. Well, I'm still young. I think I'm still young, but
still a go-getter.
Maybe not such a go-getter. I play golf. That's got to be something. But exercise. But you know, it's really interesting in the industry seeing all these young people that are, you know, just love how they talk about their business and, you know, their business, and I just love that mindset that they're, you know, and just so much new talent is out there, and it's really exciting to see. And you know, I guess if you know, one thing I learned, a couple of recruitment lessons, if you like, and I guess the first thing is, do you put them on a salary or put them on a you know, contractual sort of basis? It's so difficult of trying to get the right mix.
Like conference yesterday, and it was interesting hearing about like John Bolton, for instance. He was talking about how he structures his salary. He's like, it's expensive, you know, and it's when the market's good, I think that was the message I took away. It's a great structure, but when it's tough, it can really hamstring the business.
Oh, absolutely. And you know, and I think, I mean, again, this is my opinion, salaried staff tend to be the ones that aren't necessarily the entrepreneurial ones, but they are good at what they do. So I think if you've got more leads than you know what to do with, and, you know, and speaking from experience, I had all these leads coming in, and I didn't want to work a gazillion hours. So, right, you'd have somebody on salary, somebody that is an advisor, qualified advisor. They might start off as a loan writer, and then you can divert those leads to those people. And that's where a salary model works well, where it's not somebody who wants to go and be a big, massive business themselves. They're happy to have the security of a salary, plus maybe bonus, obviously. But it works well when you've got tons of leads coming in, and you've got a machine of advertising that's pulling them, you know, bringing the leads in. But you just can't handle it all yourself. But then you can afford to have that salaried person.
And then if you've got someone who is, I don't know, a bit more entrepreneurial, would you put them on a commission structure?
Yeah, they tend to be the ones, you know, and this is where it is difficult, because if you've got, you know, and I've had people that are just purely commission only, contractor, but then you've got real challenges of who owns the, you know, the trail. What do you do with clawbacks?
And how do you retain them?
Yeah, well, again, that's you know, I had a good one, and, you know, he left after a couple of years because he wanted to go and do his own thing, and he's doing really well. And him and I still catch up, and you know, where there's no, you know, it was an amicable split, and we still catch up for lunch every few months and what have you. You know, you've got to, I think you've almost, if you find somebody who you know will be really, really good, and they're good for, they want to do commission only and that sort of thing. I think you've just got to be open to that. They're going to want to leave at some stage. So you've got to structure your deal with them that says, that after a certain period of time they can take their trail book with them. But you've got to give me some, if I train you up and teach you over 2, 3, maybe 5 years, I've got to make some money out of it, and then you're free to go and take your book with you. That's how I would do it. Otherwise, it just gets messy when you're trying to hold on to trail clients and don't let them have them and then they leave. I think you've almost got to expect them to want to go and do their own thing. If they don't, that's great. You could potentially give them an equity share in your own business.
Do you think like a scaled structure where the longer they stay with you, the more of their or the combined trail book they own, and then if they get to a certain threshold, then it's equity? That could be a good way of doing it.
Absolutely, yeah. It's just complex, and every person's different. Like I remember one guy, he was an insurance guy, and we just went round and round and round in circles. In the end, we parted company because we just couldn't, come up with something. And I think he was dragging the chain. But it's, you've got to accept that they may want to go and make an easy path, but make sure that you get something out of it. And because it's just a win, to try and make it a win-win. And if they stay, then that's great. But again, that's the conundrum that everybody's got. The salary versus contractor.
That's
model.
hard.
And I think again, if you've got lots of leads coming in, get 1 or 2 loan writers first, and then if you get a salaried person, make sure that they've already got the qualification. I remember paying for one guy to get it, and he didn't last in the end for one reason or another. But I think the salaried model is a good one if you've got enough work to keep them going. But the hard thing is, I'm a bit of a control freak, so it's just trying to keep on top of making sure that they're not damaging your brand by doing stuff.
Yeah, how do you do that?
Well, with difficulty, really.
Like, do you sit in on meetings? I mean, now we've got technology to help, I know.
Yeah, it's a bit easier. Before it was, and again, I probably was a bit busy. I wasn't as tight on it as I could have been. But it's just having those, technology's made it a bit easier. And
I find it's tough too, because you want to give fast feedback, and some people are really receptive to it, and then others, you say, hey, I think you did it on this differently, and then you can see they're bricking themselves at just being told that they're doing something wrong. But
absolutely,
I learn better when I'm getting told straight away, you could have done this, it would have been a better result.
Yeah, absolutely. And that's something that I learned when I was, first employing assistants and loan writers. Some of us, that a business owner's a bit cocky and go off my gut feeling, and just go off because I meet so many people, I can suss people out. And a couple of people I just had like one interview with, and cut a long story short, got roasted with it. So now, when I the latter end of before I sold my business, when I was employing people, we had at least 2 interviews. I rung the references, before I was a bit slack on it. And in the second interview, I actually gave them a whole pile of, it was almost like a quiz, working out LVRs, working out just our day-to-day calculations.
Sort of like the bank test now.
Yeah. Just, and set them down, right, here you go. You've got 40 minutes or however long to do it. And that was a really good tool, because I had people come in. I remember one lady who had been she was a midwife, but she had worked in business banking for years before. And I think, oh yes, she seemed quite nice, all good. Gave her the test, just could hardly get any of the questions right. And it was just, well, that's, and other people that had worked in banks and didn't know basic, LVR calculations and other, just basic lending concepts. So if there is a tip for people hiring, don't be afraid to give them a test or sit them down and get them on your CRM on a test environment, and just see how they work online. And I think, I mean, it doesn't totally, it's not foolproof.
And some people, might be terrible at it, but they've got the right attitude. So if you train them or just give them like some of the resources, you might have somebody who's a great culture fit.
Totally.
Yep. I didn't work in finance before I started here, so this is all new.
Yeah, and it's the same. That's just that. I guess that's the interesting thing about, and one thing I love about being in our industry, and is that you've got all these hats on, and I think that's one thing that that I enjoyed so much about it is I enjoy doing the marketing and doing the website and getting the phone ringing from marketing. I enjoyed all the hats, maybe the HR one not so much, but just the fun that you're doing all the stuff, and you're building it up. And when I first went out on my own in 2010, and even before that, one key thing I'd say to people is to try and make yourself look bigger than you are. So, and that
wear
means
shoulder pads.
Yeah. Well, these days it's not that difficult, but there's some marketing things that you can measure, whether it be Facebook or the Google monster and what have you. And obviously ask people when they're ringing in, how did you hear about us? But there is marketing spend that isn't quite quantifiable. So you're trying to get as much of you out there as possible, trying to make yourself look bigger than what you are. And having professional collateral, like I spent a lot of, even if it was just me, and even now it's a little bit more online, but I'd have, nice brochures and, nice letterhead and nice folders, and, you've got to be, as professional as possible. And
did you ever consider driving around in like a Pope mobile?
In a funny way, I did. I mean, I'm not as aggressive with my marketing now that I've just started out again as I was. I mean, even I would have sign written my dog, a few years ago. You're just trying to, and again, it's just, and look, one thing that again, some things are not quantifiable, but people get to the point where, oh, look, I've heard you on the radio. Oh no, hang on, I saw your sign on the bus. Oh no, hang on, I saw you, or I see your signs all over the place. And then you'll get people referring to you who don't even know you, or they ring you up and you're talking to them and they say, oh, am I talking to Craig? Yeah, you're talking, oh, I'm talking to the big guy. Yeah,
wow.
Yeah, well, there's, where they think, but it's, and one good thing I did was, those little open home signs you see out on a Sunday on the corner?
Yeah.
Made up about 10, 12, 15 of those. And every Sunday I'd be out 7 o'clock in the morning putting those little signs around the place. And they worked a treat. In the end, I started paying somebody to do it because I couldn't be asked getting up first thing on a Sunday and then picking them up at about 6.
You could pay like a teenager to just...
Yeah. It's just, and like you just, I put them where they were busy roads and sort of near other real estate agents, but not too close. Some real estate agents got a bit toey because, that's another story. Some real estate agents getting
the face out.
Toey because you put your sign near theirs. It's like, seriously, it's an open home side, for God's sake. But, just pay for somebody, get your little signs out there. And again, and people see them and they keep seeing them. And a couple of competitors and a couple of banks tried doing it, but then they just got lazy and thought, oh, this is too hard. Yeah, that's right. I'd get up, do it every day until I could afford to pay somebody to do it. But again, it's that, and putting signs just wherever you can, wherever you can get a sign, just, and it might cost you $500 or $600 to actually do the sign, but just keep an eye out. You're driving around, obviously the car's the obvious thing. And I used to sign write the wife's car, and she'd be a bit pissed off about it because she knows nothing about mortgages, and she'd have all my sign writing plastered all over the car, so she'd get people bailing her up in the car park. What do you think interest rates are going to do? Oh, can I talk to you about mortgages? You
should get a Pope mobile. The more I think about it, I think, like, how cool would that be, seeing you drive around Raumati in your Pope mobile?
It's or I could just have like a chimney where the smoke comes out when your loan's approved. If you see the smoke coming out of the chimney, then
the bat signal.
Yeah. So, well, at the moment I've got a little bit of a tagline that there's hope. Looking for a mortgage or buying your first home, there's hope with Craig Pope, or I can play around with it, but yeah, I have thought about being a bit edgy like that, but
I remember So I studied radio, and I remember they were talking about marketing and getting yourself out there and just different ideas for adverts. And it might have been somebody in the Kapiti region for this example.
Oh, yeah.
But the radio ad said that it was a mechanic or something. So it's something that's quite generic. Generally, there's not a USP when it comes to mechanic. But the whole marketing campaign was based on, come and see how ugly the guy is, the mechanic at this place. And apparently it did wonders for business. People are like, I got to go see this guy.
That's gold. That is gold.
Not saying you should do the same thing, but if it's something a little bit outside the square.
Yeah. Well, because I have got my face, like I say, you just get it on signs on the back of a bus, and and I'll get people that you got to do a good job. You can't do a shit job and be all over the place. I do like to think I do a good job, and then that if you're good at what you do and you add it to some cunning marketing, which does require some spend. Look, again, bit of a tip. Look at your, assuming somebody's done a business plan and they've worked out some goals of how much they want to earn. Let's say it's 300,000. In that first sort of 1 to 5 years, you want to be spending at least 10 to 15% of your desired turnover on marketing. I mean, I spent a shitload on it, but it did pay off because it just becomes a bit of a steamroller. The hard thing was actually pulling back from spending on it. But then I got to the point where I was hiring staff, so kept the spend going pretty much because it was being a bit of a steamroll of leads, and we had a good reputation, and and that's a good thing about our business. There's little things you can do, like for example, if somebody rings me with a referral, or even if I hear, such and such a real estate agent said to give you a call, I'll send that person a lotto ticket. Doesn't matter if it went ahead or not, but the fact that, and handwrite it saying thanks for the referral.
If you win, let's split the winnings.
Yeah. Well, one agent won about $700 once. I do say, well, if you win the big one, you've got to share it with me. No, not really. But just little things like that, that the lead doesn't have, but it's just thanking somebody for thinking of you. It's just that little, and a handwritten note, made the time to do it. And same with clients, if they refer people, and then, if it goes ahead, I'll just send them a voucher. I don't have any, I guess one thing I've never done is I don't sound this, I'm not going to sugarcoat it. Actually, I don't kiss the ass of real estate agents. I don't pay them a cut of the commission. It's about if they see that I do a good job to help them in their business, then they'll refer to me, because real estate agents can be a little bit fickle. Yes, they're a good, there'll be a few people watching, jumping up and down, that just deal with real estate agents. That's great, but they haven't really been how I've got leads in, because they can be a fickle bunch. In the early days, you'd be, building a relationship with a real estate agent. Next minute, old, Johnny from XYZ Loans comes in with morning tea, and all of a sudden referring to them, and do you pay a cut of your commission? Well, no, I don't, because I've got this massive clawback liability. So, if you want to refer to me, you do it because
you like me, and
you think I'm going to do a good job, and subsequently, if the loan settles, I'll send you a voucher or whatever, not an unwritten thank you gift.
Sometimes just saying thanks. I remember I went to this conference once, and they did a test of the room, and they said, would you rather if you do a good job, would you rather your boss or your employer say, great job and thank you for it, or a cash incentive? And the majority of the room went to the part where they just wanted to be thanked and appreciated.
Yeah, and that's a really good point, because when you're a control freak like me and you've got staff, it's kind of like the hard thing is just, right, it's got to be done this way, and if it's just being a little bit more relaxed, if they've got putting their slant on a diary note or whatever, just let it go. In the early days, it was like, it's got to be exact. And again, just saying thank you if they do a good job, because you do get, busy and you don't sort of stop and reflect. The other thing I was going to say too, that I was thinking on the way here, is that one other bit of advice, again, in that 10-year period while I was head down, bum up, before I sold my business, and actually I'll come back to the selling part of it again, is that, doing long hours isn't necessarily a measure of success. We love what we do, and long hours sort of comes with it, especially if you're a one-man band and, but, I have to admit I was a bit of a grumpy dad in that 10 years because I wouldn't switch off, or if I was on holiday, I was, emailing people and taking calls or whatever. And we work in a frustrating business. It's a rewarding one, but it's bloody frustrating.
A lot of red tape.
You get a bank emailing you about something that was in the diary note, or and it's just like, oh, for goodness sake, and or the client didn't tell you about something that the bank's picked up that you didn't see. It's there's frustrations. So I would take those frustrations home. So I was a bit of a grumpy dad for those 10 years. And if there's one thing that I'd say to people, it's all right if you're young, you don't have kids, fill your boots, do what you want.
Grumpy dick.
Yeah, but it's just
take it out on somebody else's kids.
Yeah, but it's really important if you've got young kids and you're in this industry, you've got to switch off. And I learned that. Switching off at, I'll come home and, when I had staff, I could try and switch off at 6 o'clock and just not look at it. Emails to maybe 9 o'clock when the kids were in bed. Because, you've just got to value that family life. And I think, I regret being a bit grumpy with my kids because I was on edge and, you're just taking work home, you're taking it on holiday with you. So, just one key bit of advice, don't, you can't save the world, in saying that, one thing that I think that does make a successful advisor is being quick with inquiries. So, again, when I was a bit too switched on, I'm sitting at home at night, watching Coronation Street once I've finally sort of settled down. I do watch Coronation Street, sorry.
Hey, you don't apologise.
And I'll be getting inquiries on email, and I'll be quick response. Always have a quick response. Just say, even if you can't talk to them right there, just say, great, got your stuff, got your email or got your call. It might be a text or an email. Say, I'll come back to you first thing in the morning, or I might copy and paste some questions I've got. But in the meantime, have a look at these questions. So always a quick response. Don't leave inquiries to stew, because there is a ton of other people they can call, and I think that was always something that people got fast responses, even if it was thanks for reaching out, and even like, I'm doing a deal and getting it set up, and I get an email in. It's like, thanks for your email. I'll come back to you shortly. Back into it. So always have that fast response, because there's nothing, even when you're out buying whatever, if there's one annoying thing is if you've rung your plumber or builder or whatever, and they take 2 or 3 days to come back to you, think, nah, bugger it, there's tons of others I can call.
If the plumber came back to me in 2 or 3 days, that would be my plumber for life.
Is that the Auckland time frame turnaround?
Man. I had a little bit of work done on the toilet 3 months ago, and I texted the guy after he did the job. Took him over a month to get in, and then I said, send me the invoice, I'll pay it right away. And he just hadn't sent it to me, so I'd followed up with him, and then he's just sent it to me last week. I'm like,
oh no, amazing, eh? Yeah. Again, this is, that's an industry where people aren't business owners. They're good plumbers, but maybe not good at all the other stuff. And I guess that's the fun of our industry. We can be all those things. Not necessarily that's, as you get bigger, that's the best thing. But going back to the, if people are looking at selling their business again, I guess, don't be afraid to, depending on your timing, really. Like I say, my plan was contract back to the company for a couple of years, and then set up on my own again. So I guess it depends on their timeframes, how old they are, and where they want to go. But start building relationships with other bigger broking outfits that may have the money that you can say, hey, look, if someday I might want to sell my book, how about we keep in touch? And and I was lucky enough to, I'd be lying if I didn't, especially when volumes are down, I'd be lying if I didn't miss, I had a significant trail book. I'd be lying if I didn't say I didn't miss that. But the multiple I got for my business was way above I can't say too much, but it was way above what the normal is for a mortgage book.
How do you figure out the cost? Do they come in with a bid? Do you set it? Like, how does that negotiation part work?
There's a few parts to it, I guess, because you've got clawback liability. So I do carry a little bit of that now that I'm back on my own. But I there's so many facets to it. Some is what happens with clawback and restraint of trade and whether you are gonna contract back to that company as a commission only. So I contracted back as just a commission only. I got a couple of staff, but I didn't own the clients. I didn't own the trail or anything like that. So it got to a point where, right, it's now's I miss doing my own thing. So it is complex, but and a lot depends on what that exit strategy is. It could be that, if I want to get out completely or I want to retire, I'll give me a good price, and then I'll come and work with you for a year or whatever to make sure that nice transition of clients, and I can just plant the seed that, just slowly pass it on to the company that's, bought your business, that relationship.
Okay. And what are some things you would look for? So if you were looking to buy a book,
yep,
what's a good indication of it being quality? Records.
Bloody good question. Yeah, it has to be records, and I think if you can, just talking to the aggregator about, because you guys, again, you can be good sources of information about how that, sometimes a little bit of it's off the record, is that person, how have they been with the banks, and how have they, do they have any complaints against them and things like that. Obviously, some info you may or may not be able to glean out of it, but it's, I guess a lot of it comes, and the other thing too is that for me, I had kept really good records. A lot of them were a little bit more manual, but I had really good spreadsheets, up-to-date profit and losses, and, in hindsight, I did actually have an admin lady, and a big part of her job was looking after the trail, which was something I sort of think, well, the amount of money I spent on her salary, part of her salary to police it, the amount that dropped off was not worth policing if that's, but we kept a pretty tight ship, and like I say, if one thing I would have done a bit differently, I might not have had as much staffing doing refixes and, maybe just using technology more and not, I was a bit overstaffed on doing the refixes and the reviews because I wanted to keep that experience going. But you've also got to look, the cost versus,
what's the value they're bringing in?
And look, we were still doing monthly. I'd do monthly e-newsers. I'd do quarterly hard copies, so that they did get a physical communication from us. So always big on that.
Just going back to having staff in the business doing certain things, and then I have this, not that it's a challenge, but sometimes businesses look at us and they go, "Oh my God, this is great," and you can almost see the support staff in the meeting going, "I'm going to be out of the job here." But the reality is, if they're good employees and they're good to work with, they can add value in other areas of the business. They might want to train to be an advisor. It might free them up to do things like newsletters. There's so many different avenues you can go down. But I think fear of going, "This is going to take my job," it's actually an opportunity like that.
Oh yeah, you've actually touched on a really good way to explain it, and it almost comes back to when I first hired my first PA, 2006 or 7. You've got to hire them before you fully need them, if that makes sense. Because once you've got them, you'll find work to give them, and that frees you up to do more. Whether it's networking or blog writing or whatever, or more meetings or closing more deals. So, yeah, if the support person's there thinking, "Oh, that's taking me out of the link," it's right. What else can we get you to do that helps the advisor to generate more income? So you've explained it really well, that it doesn't need to be, it should be more of an opportunity that, that person can do other stuff that helps the advisor
for sure
write more business. It doesn't mean like you're out of a job because you've been
replaced by a robot.
But again, another piece of key advice is if you're thinking about hiring a staff member, and I'm going to have this problem again myself in the next few months, is that you've got to hire them before before you need them, basically, because you'll
weird
find.
that too.
And look, it sounds bad, but I used to get my PA to just go across the road to get me, a bacon and egg sandwich back in the day. I thought it was actually quite cool. It was like she was so good, and she was so good on technology. And I say, can you go get me a bacon and egg sandwich? I'm just really busy, and like she would just be all over it, and it was. I thought, oh, I like having this PA. This is pretty cool.
Bacon
but again,
egg
it saves you time. It's anything that saves you time. And I used to, luckily my wife won't be watching this, but well, probably not. And I used to get her to go out and get gifts for my wife or whatever. Just get her to do, take my dry clean. Just get her to do shit that you've got to every day, that your day to day stuff that. Get your support staff to, again, it's probably more a PA role than, if you've got an administrator that's doing a bit of everything, you might be just a single advisor, but don't be afraid to have this person say, look, your job is to help me free up my time. So sometimes I might need you to, whiz out, and you give them petrol money or whatever, but, I need you to go out and get my dry cleaning, take this to there, go and buy the wife a birthday gift.
I love this because it's focusing. You mentioned before about time management being crucial.
Yeah.
And the key, top advisors, they always spend more time doing revenue generating activities.
Yeah.
And every little thing that takes you away from that is costing you money.
Oh, absolutely. Because to be fair, if I've got to jump in my car and go and buy the wife a gift.
We keep coming back to this one.
Holy shit.
Did you give her like a brief idea of what you thought was good?
Yeah, there was usually a little bit of a brief, and it's just really, but if I'd say, if you've got any ideas, just, but really I'm thinking this or that, or dare I say it, a voucher. But if you get a voucher, we better get her something flowery as well.
Don't say lotto ticket.
Oh yeah,
with a little message on the card.
It's probably been in there somewhere.
Yeah, if you win it, we split it. Yeah.
Yeah, but it's just that stuff. Yeah. I keep thinking my wife, I'm nervous about letting her check my lotto tickets just in case she, she wins the 25 million and says, right, see you later.
Well, I mean, I think
might do that.
You're being married. I think you have to have half of it, don't you? That's how it works.
Yeah, well, that's no good to me if she's halfway to bloody Hawaii or something like that, with the...
True.
I'm sure that sounds really bad, but, but I guess don't be afraid. If you're hiring that administrator, just, say, look, this is helping my time. You've got these are the sort of tasks, do you have a problem with that? Because, some of them are going to be menial, but it gets my PA loved being out of the office and going shopping for a gift for the boss's wife. She was all over it, but she was, she was gold. And ironically, she moved to Australia and we inherited her dog, who's still a big part of our family.
Oh, cool.
So she's still helping the family and,
Still online e-gifts now.
Yeah. I just hate buying, luckily the wife does all the Christmas shopping and...
even for herself.
Yeah. I have moments. I mean, I'm a big shopper for myself, but not, I'm just no good at for other people, to be honest. Every now and again I have a good period, but...
I try and write mine down. So I've got like, I know my partner doesn't listen to this, but I've got a little note. So I'll think of an idea for something.
Yeah.
Oh, mum would love that. And her birthday might be 6 months away. And then when it comes to the point, I go, that's right.
Oh, that's where I've been going wrong. Yeah. See, I'll be driving along and think, shit, that would be a good gift for the wife. And then I forget about it.
Sometimes you have moments of, I find this when I'm lying in bed at night because I'm always so distracted throughout the day. Even when you go to the loo, you bring your phone, all these little things, you're constantly just like being distracted. And you lie in bed at night and you have these great ideas. So I quite often find myself just rolling over, getting my phone, writing down these notes, and in the morning you go, that's right, what was I thinking about? That.
Totally, yeah. And that's, and I used to, funnily enough, doesn't happen too much as much now, but I would have a bit of paper because when I'd go to bed, that's the thing, you'd be hard to switch off and I'd be thinking of these marketing ideas, thinking, shit, I could do this or I could do that or I could put a sign there, and I'd be trying to write it down or I email it to myself on my phone to remember to do it. So and that's the other tip I've got too is that, especially if you are new, you've always got to be networking. So, like I say, I had the car sign written in the early days, and then when I felt I wanted to be a little bit more incognito and, I got the wife's car sign written, but you've always
Your dog sponsored by
yeah,
Craig
yeah.
Pope.
I tell you, I could get some dog coats maybe done it, but
This is Rex, brought to you by Craig Pope Mortgages.
yeah, exactly. There's so many different things you can do, but the key thing is especially when you are getting a name for yourself and you're out there in the community, literally every time you jump in your car and you go anywhere, you've got to be networking.
Can't cut people off if you got a branded car.
No, that's the other thing too. Road rage, and be careful what you put on, commenting on posts on social media. Like you see some absolute muppets writing stuff on community pages, and you think, I'm going to rip into this idiot, and then you think, oh shit, no, better not, because my name's on it. You've just got to be thinking that there's some stuff you can't. As you build up your profile, you've got to be careful of.
That's when you start making aliases. So you can
I didn't think about that.
Yeah,
See
yeah.
that? Your younger generation, yeah. I must get my kids to show me how to do that.
Yeah, only if you use it for good though. With great power comes great responsibility. The other thing I want to talk about, because we're kind of jumping around a wee bit here, but marketing is something that can be quite hard. I know attribution is a big challenge for marketers. Attribution's finding out where your leads are coming from. My partner works in marketing. I think there's specialist companies that actually do that for you.
Yeah.
What things from when you first started running a marketing strategy, you're putting that 10, 15%, what parts worked and what didn't, now that you've done it a couple of times and maybe kind of transitioned through different stages of marketing, like Google compared to billboards?
Yeah, it's a really good question, because, and especially as your turnover starts increasing, the temptation to throw money at stuff that you don't need to, and you're getting all these phone calls, every man his dog's ringing you up to advertise and stuff. Obviously the simple thing is some things, if you don't know how to do it, get somebody to show you what's converting on Facebook, but even then it's it might not be 100% accurate, but other stuff, it's really just asking people how they heard about you. But the difficult thing is how do you control that spend? And I'd be lying if I said I didn't throw stuff at, especially when newspapers would ring up and say, oh, we've got this special on, do you want to do it? And yeah, just go for it. And before you know it, there's $300 or $500 there and everywhere. So I think go for things that are a little bit more continuous.
Repetition, right?
Yeah. Like I do a little bit of radio. It's not much. It's like, $300 odd a month. Okay. And then I've got this little ad in the local newspaper that comes out weekly. It's on the front page, but it's just a small one. Again, repetition. So try to get that repetition. The open home sign's out every week. Repetition. I had a sign on State Highway 1 in Paikokariki when the old road was open, and it was like bugger all. It was like $600 a month or something, but millions of people saw it.
God, stuck in traffic down that road.
Yeah, absolutely.
Prior to transition.
Friday night, just about every night, they got to see my ugly mug on there looking at them, and it's...
I think I need a mortgage, yeah.
Totally, but it's pick things that are a repetition. I guess the hard thing for newer people starting out is, as my turnover grew, I wasn't afraid to spend money, but you're still, you've got to be careful. There will be stuff you spend money on, you look back and think, why did I...
Well, what are some examples of that you've found? And again, it might not work for you, but work for others, but good to hear it.
Quite often the one-off print things, things like, and some things start being okay, but then don't. Like I did a couple of home shows, maybe 3 home shows in at the stadium, like they had the home and garden show, but it just ended up being,
Big time suck as well.
Yeah, as well, there's just time, like Friday to Sunday, you'd have your posters, brochures, the fee for the stand, your time, and in the end, I was looking at the leads coming in, and I was thinking the return on investment. So sometimes you got to try it, and some things are obvious like that. Food show, I had a stand at our Kapiti food show for a couple of years. First year was okay. Second year, it was almost, I was like, if you're one of the sponsors, you got a stand, but then you sort of, people are walking around thinking, you're not selling food. What the hell are you doing? I don't want a mortgage. I want a hot dog.
Start frying some sausages up.
Yeah. Well, again, it's just like.
I also do mortgages.
I know. It's like, it's having if you're going to do something like that, it's got to be something with a wow factor and there's peripheral cost. Actually, another thing I did was a chance to win a car. So actually, first it was $20,000, then I had a car, so it was a chance to win. So you pay an insurance premium. I forget what the company's called. So you'd pay them if it was a $40,000 car, then the premium was maybe 10% of that, maybe $44,000 or something like that. So what it was is that you had this real wow factor prize, but it was a chance to win. So you would draw out the winning client, and then they would have 100 envelopes that they would choose, and one of those envelopes that would have the winning envelope for the car. So it gave you a bit of a wow factor without having to stump up a 40 grand car if somebody chose the winning envelope. But there is a company where you can, like you see, there's, you'll be surprised, it's all over the place where you pay, depending on the risk, you pay a premium so that if the person wins, then that insurance company pays out. I dare say there's some hole-in-one competitions around.
The one in Taupo.
Typical one. Yeah, well, they probably make enough cash flow to cover it.
There's a story that Guy Williams, he did like a little, I think it's on YouTube, he's like, can you win it? And I think he like swims out there in the middle of the night and tries to get the ball, and you can win it, but I don't know if anybody ever has.
Sucked out a bit of my money down there, to be honest.
It's got the wow factor.
It does. I mean, it's gold, and they probably, for them, they could probably have, I think you win like 5 or 6 or 7 grand or 10 grand maybe on that hole-in-one now, but they could make it 100,000 and pay an insurance premium that if somebody did get it, the insurance company pays out. So that was a bit of a, and that was expensive, and you've got to then spend money promoting it, and whether it actually, generated any business or not, out of the norm, marginal, really.
You never know. It's just hard, but one of the best takeaways I got from Nick, who works here, is he said good management or, good branding is always just repeating few things often.
Yep.
So
repetition.
Anytime have somebody new, it's, what is the best way they can add value? It's, I don't know, for us, it would be like maybe meeting with clients, someone on the support team. It's, someone's got a difficult inquiry, pick up the phone,
Yeah.
Just constantly like hammering those points into the point where they get it, and then you can start focusing on something else, and it works in a similar vein of marketing. Need a mortgage? Craig Pope.
Totally, and it's again, it's it's not for the lighthearted, and again, other people, I guess I was a little bit lazy and thought I'll just throw money at this and then build up, and then you've got to be good at what you do and just have a real, really good service proposition. So we had a good service proposition. We were good at what we did. So we did generate leads, and then, from there, once you build a good client base, then you've got, that marketing to them to get those referrals, and
you can almost pull back on some of it and just do remarketing to your existing database.
Yeah, and that was where we kind of got a couple of years out from, 2 or 3 years out from when I sold the business. I was looking at thinking I could probably pull back here, but then I hired loan writers and a couple of salaried people to take up that slack.
Are you using Trail? There's a part in there where you can set where you've met them from as a marketing lead?
Yes, I need to add in, because can you add in?
You can add in custom ones.
Yeah, I need to do that because
I want to see if end of the year. I want to see where they all came from, and then we'll do a bit of a rework.
No, it's I mean it's something you've always got to do. So, and the funny thing is, you get people referring you that you don't even know who they were, but they might have know somebody of somebody, or they'd seen something on a Facebook forum or seen your signs, and it's funny. It's good and bad, but I'll be out with my kids, and I'm saying hi to people all the time, and they go, "Dad, geez, you know everybody." And even if we go even we might be out of town and it's like, how do you know that person? It's like, just somebody I know. It's
Do you
quite
remember
funny.
everybody?
It's funny. Maybe it's an age thing. I do. Most I remember faces better than I remember names now, and it's but it's nice. You go out and you always see people, and the kids find it funny. It's say, oh, Dad, for goodness sake, you know everybody, and I put them on a billboard once, the kids and the dog, and I thought it was quite good, but they said, oh, Dad, that's not cool. Can you take us off that billboard?
What did the billboard say?
Oh, it was just, you know how you have
Kids for sale.
Kids and, a bit of, the wife was looking good. She was, did I have the wife in there as well? No, better be careful what I say. No, I just had the kids and the dog. Because nice little family, fluffy photo and just to, and personalise it as well. It's just having, but and it's social media is hard because, to be fair, mortgages are pretty boring. It puts most people to sleep. So actually having something interesting, on your socials and
a bit of personality. I think people, even looping right back to the start, people usually, it's great having a brand and a business, but 99 times out of 100 in this industry, people are going to the person, not the brand of the business.
Oh, totally. And be careful what you put on there. It's and if you post something and it's only had one or a couple of likes, then it's like, well, why didn't that get more traction? And quite interestingly, actually a good example of watching what you put on there. I mean, a couple of people in there, their LinkedIn or what have you, recently put that, the gate had opened for pre-approvals again, and it was just
swiftly shut.
It was a rookie error, really, if you're an advisor, and, I say this not in a mean way, but if stop and think, the chances of that Westpac pre-approvals for new to bank clients, that was never going to last, It was, so to put something in your, you want to put out good news, I get it, but just think, is this likely to last? No. So you be careful putting it on your social media, because now you've said to everybody that, hey, first time buyers, there's great news. And if you mention Westpac, well, that's probably not a good idea either. And then all of a sudden you're going to look like a dick because it's actually the plug's been pulled. And so I don't know why Westpac did it. It's a shame because I love the idea. They're trying to help people, help us, but you could see what was going to happen. And I think they've
still got it though, but it's just for existing
probably just
clients,
for live deals and it's tough for the banks. It's tough for us because we're all, the house prices have dropped. Yeah, interest rates have gone up. We're trying to help these first time buyers, but it's just like, the Reserve Bank, just loosen it up a bit and it's...
It was bloody interesting, sort of dating. We release the podcast. Sometimes we pre-record them and do them later, but we were at a conference yesterday, and I think, John Bolton from Squirrel, there's one point that I thought was really good, and he said it was when the market's at the bottom, and interest rates are quite low, they're giving out too much money.
Yeah.
But then when you get to the top of the interest rates, let's say we're at the peak around the 6.49 mark, most of the main banks are at the moment, they're not giving out enough because that servicing rate's 2% higher.
Yeah, yeah.
So they need to meet somewhere in the middle, and I thought that was such a point.
He articulated it really well, and
probably better than I did then,
but it's not quite fair, is it? It's and the servicing rates. I mean, again, what's the average rate over a long period of time? 7% or something like that. Probably need to check the RBNZ records, but. The banks could do worse than sort of having 7% maybe is their average test rate, maybe. That probably could throw some other...
Must be bloody hard for them though, like setting that.
Yeah. And look, we look, and I do look at people's budgets at the moment and think, shit, how do you live? I want to get you this loan, but I'm looking where you're spending your money, and they might have 2 kids, and I know how kids suck money out of me.
Bloody bludgers, aren't they?
And, and my son's texting me all the time, Dad, can I have money for this, money for that? It's just like, dude, and he does bugger all work around the house, and he gets a little bit of pocket money, but
I gave you that money for that marketing. I put you on the billboard. Where's that?
Yeah. Oh, yeah, did I pay them for that? No, I think I did. I'm sure they got some money out of that. But it's just it's hard because I just look at people's position, and it's I just really feel for them that they've got to borrow this amount, but I look at their expenditure, and I'd hate to look at my bank account, to be honest, in great detail, but I look at other people's and I think you've really got to peg it back. And over 8% test rates, a little bit unfair, but it's
risk mitigation.
Yeah.
How do you educate clients or put them on a straight and narrow when they are overspending? And how do you do it at scale and that's efficient for you and you're not kind of spending a lot of time on it?
I know it can be delicate because some people, you just look at it and you think, what the, and they might be on good incomes, but they're getting their nails done. I won't say if it's a male or female, but they're getting their nails done and spending, $50 a week on that, and they're doing this and that and going to all these. And to be honest, a lot they probably don't realise a lot of the time. So I'll just delicately say, look, looking through your statement, and sometimes I'll even send them a bit of the alien summary that says where they're spending all their money, and just say, look, you really need to probably peg it back in certain areas. And look, one thing I don't buy into this, if you give up coffee, you'll save shitloads of money on your mortgage. Bugger off. I won't do that myself. So don't go banging on to people if you don't buy a coffee or 2 coffees every day, you'll save 40 grand on your... No, bugger off. I'm not going to do it, so I don't preach it to anybody, because you've still got to have some
things you enjoy.
Some things you enjoy, and this is where, and I'm digressing slightly, where some of these companies that show if you do this, you'll save $200,000 on your mortgage. Bugger off. How can you ever put a figure on it? You can put a projection, a rough idea, but holy hell, life changes one year to another, especially when you've got kids. Your finances is so different. So I really just try hard to simplify it for people and say, look, I'm not going to tell you to give up coffee. I'm not going to do it, so I'm not going to tell you to do it. But you do have to look at your expenses. Use the banks. Pull into Excel and just look at it. If nothing else, have a look at it. I can send you a summary. Just be aware of where it's going, so that when you're in that shop and you've got that impulse purchase of getting that new $700 barbecue, do I actually need it? Let's just go away and think about it for a day or two. And then, and in terms of saving money on your mortgage, I just say, put in more than the minimum. Put in as much as you can afford. It's easier with people with high income, and you can really rattle their cage. But people with their budgets, and sometimes I used to, like, the girls in the office used to laugh, because the typical thing they would hear from me was, I'd be saying to somebody, look, I'm not going to sugarcoat this, and I would just give them some straight up advice. And again, I'll say to people, look, you've got to do this or this to get to that.
Just setting goals and then steps along the way. I think it's a cliche, I don't want to sugarcoat it, but I think people do respect that straight up being told. They come to you, you're probably more of an authority figure if you've, proof is in the pudding. You've bought your own home. So.
And look, and we're trying to help people reach their property goals, and it does hurt sometimes, because you'll get these people, and I've just had one yesterday, they've got 3 kids, and and they want to buy a house, and they're looking at an $800,000 house, and their borrowing power is like $250,000. So it's sad, but I say to them, look, while one of you is working full-time and the other one's barely part-time, and you're young, you don't have to do this right now. Just here's what you've got to do. Just the last thing you want when you've got 3 kids, even if I could get you the money, is a big effing massive mortgage hanging over your head. Just be patient. Renting's not the end of the world to get from A to B. And look, if you've got if you've got 3 kids, just that stable home life, living close to schools and support network is more important than getting on
I hated moving as a kid.
Yeah, it's more important than getting on the property ladder. Don't be so fixated. Got to get on the property ladder. You don't have to. Not right now. There will come a time. Just, you've got 3 young kids. Jesus, that's a challenge in itself. Just build up. Don't keep away from debt. Just keep building up your savings. And when they're a bit older, a bit more self-sufficient, and you're on 2 incomes, then life will be a bit easier. I mean, a good example is that, in the last year or 2, properties have skyrocketed, and you've got all these kids that are racing to get on there. Whereas if they just held back and be patient, things have bottomed out pretty much in a lot of areas. So, it's you want to help everyone, but you can't. But sometimes it's just saying, look, it's not a good idea to try and do it now. Don't feel disheartened. This is what you need to do. And that's, and quite often you get people who are, they might be single and, around 60-year-old, and they've got a good, deposit, but income might not be massive. And, it could be that they want this house but can only afford that one. And it's like, well, if you don't, if you want this, but really you can only afford this. So, maybe it is just getting a cost-effective rental and investing that money that you've got wisely if we can't get you on the ladder to, and it's just being upfront with people. And, but, again, I always give them how to get to the solution or, but, there's just, I guess as I've got older and grumpier and
I thought you got less grumpy.
maybe it's because I'm a one-man band again. It's but no, but I'm passionate about it. You still, I don't think there's an advisor out there that isn't. We don't do this if you're doing this and you haven't got that empathy. And that was something that I always, when I very first started in 2005, I thought, man, I'm earning good money and all I have to do is give good customer service and actually care about the punters, and that's, the empathy. And again, if you're out and about, you're always networking, you're always got that empathy, you care about people. And whilst I give people, not necessarily the news they want to hear when I'm talking to them, meeting with them, it's because I care about them. And I think that's the thing we've got bogged down with, admin. We've become a little bit, I think we've all got the same problem. You get so bogged down with admin, you don't get as much time to, handhold the punters unless you've got really good systems and processes and tons of staff. But it's a challenge these days to really, you don't get as much time because you're too busy writing, having to do all the admin work. I think that's something that's a little bit, whilst it's been years since I've been to see somebody in their house, I used to, I think we've all been there where you're rocking up to somebody's house at 7:30 at night, probably the last place you want to be when you want to be at home watching Coronation Street because you've had a 12-hour day, doing admin or whatever, or having meetings. And then, but I always came away, and I still do come away from meeting people with a good feeling. It's so nice meeting people and you're helping them and they appreciate that you've got that. And as you get a bit older and a bit more life experience, you can add more. I guess that's the thing that some of the younger brokers have got to be patient to learn, is getting that life experience to be able to add that extra
time.
Yeah.
Give
but
time.
it's just a shame these days we're so and but at the same time, that's where we have to be not afraid to say no to people. Or if it's a small loan where you can, it's a top up and you're weighing up. It's like small top up. You want to bring a new client on board, potential referrer, but at the same time, all the information you need for that small top up's the same as you need for a $1 million house. So it's thinking, well, how am I going to approach this? Because really, I know this is going to take a few hours versus what I'm going to get paid. And I think that's the hard thing these days is how we handle that. And I think there's been times when I've looked at it and I've said, I can help, but I'm going to have to charge X amount just purely because of the work involved. But if it's somebody that's been referred, I might not do that. I might just
have
do
it in
it.
your back pocket though.
Yeah, and that's a conundrum we all face, and it all comes with just pre-qualifying people. And I do it on the phone as much as possible, because literally with a few probing questions, I'll know where something's gonna go. Yeah.
We've touched on a lot of great topics. I think the buying, selling a business part is something a lot of advisors would be really interested in. The marketing aspect again, so it's so good to touch on it because it's one of those really challenging parts everybody knows they should do, but it's just hard to know where to start.
Yeah.
If advisors want to reach out to you, how do they find you?
Oh, look, Craig Pope. Oh, if you Google me, you'll find me. It's Craig Pope Financial is my new website.
Driving through Paikakariki, you'll see you there.
Yeah, that's not there anymore because the transmission gully.
Yeah.
This my key marketing jewel in the crown is gone. But look, I'm almost sick of listening to myself waffling on the last hour. But if I love passing on that because we're all in the same boat, and that was a good thing about the conference yesterday. Just meeting people that some people had known for years and years and hadn't got around to catching up. And I think that's something we've missed in the industry is these mortgage broking catch-ups. And if you're not, and I just, if the newer advisors out there, embrace these things, there's, the business that bought my business, they weren't members of the Financial Advice New Zealand and still aren't. And I just say, why are you not a member of that organisation? This is, they're advocating for us. Don't just look at it and say, oh, what am I getting for my $60 a month? Seriously, just be part of the industry and support something that's trying to support us. Get to the conferences, just support you guys, support the aggregate, just get out there and get amongst it. I didn't have time to take a day out. I've got a million emails piling up but no, I've got to support the industry, get to this conference and it's worth it. If nothing else, just to get out of the office.
Yeah, have a break.
Yeah, always
go
a
and
big
get that
part
gift
of
for your wife.
Yeah. Hope she's not watching, but and yeah, happy to. I just love waffling on about the industry. Yeah,
I think there's so much in here that advisors will really love, and I've probably gone over a little bit more than what we normally do, but you know what? It's evergreen content, and a lot of it will apply in years and years' time. So I think advisors will really get value out of this. So I really appreciate you coming here and giving up your time to do this. I know you could have got your PA to come in and sit down and have a conversation on your behalf, but I think it was great, Craig.
No, really loved it. Like I say, I've done the whole full circle, and it's great being back to being a one-man band and doing all my own dirty work and buy my wife her presents. If I can remember her birthday or wedding anniversary.
Chuck it in your
calendar.
I can hear my dog on the outside of the door. That's probably a good signal. It's time to take her out.
Happy to help.
Pleasure, and
cool.
Look forward to seeing you the next part of your journey.
Sounds good.
Cheers.